All right, this is Enda here. This is the weekend video, start of week video. I didn't get to a weekend video, but here I am now. I'm back. And first of all, let me get this out of the way. Self-promotion. If you're interested in daily or nightly Elliott wave analysis on your favorite markets, head over to bullwaves.org and check out the membership options. And you will have access to nightly updates, nightly charts, nightly analysis, nightly analysis. And you'll have my ear also. Okay, so without further ado, let us move on into the markets. Let's go over here. Yep. Someone emailed me last week and asked for like a long-term perspective. So this may be a long video because I'm going to give a long-term perspective. You asked for it, you get it. I'm here to serve, as they say. Oh, I'm going to start with the long-term charts and I'm going to work through it. But I'm going to try and do it as, let's say, quickly and efficiently as possible without falling asleep at the same time. Okay, so let's do it. So this is euro dollar. I've been watching this, ABC decline into a B wave for a long time. So we had 5 waves down over the last year, let's say year and a half. 1, 2, 3, 4, and this final decline to complete wave C, this 5th wave decline was an ending diagonal, so it had internal 3-wave internal patterns for each wave. So you had 1, 2, 3 down in, ABC down in 1, ABC down in 3, and ABC down in 5. So we finally got to the end of that channel. We finally got to the end of the diagonal pattern. Let's say October area. When was that? Late September, early October, and we spiked off that low. So we were looking at a possible reversal pattern. We seem to be getting, we had a few false starts on the reversal pattern back in September, late summer September, but we've had a few false endings here as well. So it's a one wave up, I think. So we're beginning a large C wave, I think. So this long C wave pattern will take us probably another year to trace out. So 2023 is looking up for the euro dollar, but in term here there should be a correction lower. I think if we've got more or less wave 1 done, close to anyway. I think we had a false start last week, so if we're close to wave 1 done, then we should be looking for a pretty sizable correction lower, probably back below par again in wave 2. So look at a 4-hour count here. You can see a possible wave one scenario here. The only thing I don't like about this pattern is it's a possible ending diagonal within wave after complete wave 3. Maybe, maybe not. You can view it 2 ways, as with everything in life, eh? Well, no, some things are clear. Okay, so if we've got wave 1 close to complete, we need a wave 2 down. I think that's just pretty plain and obvious, as obvious as the nose in your face, as they say. So I think wave 2 down will probably bring us towards parity again in 3 waves, and it'll probably be over the next month. Depending on how deep the correction goes, next 4 to 6 weeks will be wave 2 down, probably 4 weeks. Into the short-term chart, this is the hourly chart. You can see that we had to update the internal pattern here for wave 3 to complete an extension. We've got a pretty nice 3-wave pattern lower in wave 4. We had a large extension in wave 3 in blue, so this I don't think we'll get a large extension in wave 5 because of that. I think we've exhausted let's say the acceleration potential within wave 1 in wave 3. So now it's completing wave 5. Right now, I'm just going to have to wait and see whether that actually comes to fruition this week, and we reverse again, begin another potential wave through to decline. So that's where I'm looking at long term down to short term in euro dollar, pound dollar. It looks like we have a correction higher coming in cable. Now we will see. We're kind of we're within a kind of a slightly different In general, the dollar should appreciate against these currencies, but for the short term, for the next few months to 6 months, I think cable will probably rally overall. So we've got a 1-2 pattern here building. We're in the second wave now, but I don't think we're complete just yet. So here's what I'm looking at in the shorter term. Here's the 4-hour pattern. I think we still have wave B to complete. So we've got 3 waves up in wave A. We're coming close to wave B done now. The internal pattern has to kind of, let's say, flesh itself out a bit. It looks like we've got an A and a B close to complete, and we need a C wave down to complete wave B. There is alternates to this. We could eventually end up with a 5-wave pattern higher in wave A, which would mean that we'd get a new high. But I'm not going to look there just yet because we're still pretty safe for now, anyway, in this short-term pattern. So it looks like we're still within wave B, but we're completing wave B of B. And again, as frustrating as any wave can be, wave B of B is the worst. So I think wave C down is still yet to come, but we'll need confirmation on that this week. Here it's an expanded flat correction wave B, and we should turn down into wave C, and that will bring us lower. Don't really have a set particular target for wave C. And on the 4-hour chart, I'm looking at probably about 115, maybe, for wave B to bottom, but that might even be a stretch too far. We'll see how it goes. So the hourly count shows wave B in green, pretty much done. We're looking for 5 waves down in wave C, but we have not confirmed a top for wave B in green just yet. Okay, let's move on. Here's dollar yen. We're looking for a low to complete in wave 4 and a rally in wave 5. Now, let's get 4-hour count for a second. Not entirely sure yet whether we have turned, off the lows. We've had a significant decline. We were looking for that significant decline. We've got it. It's been it's been less corrective, more sharp and impulsive, to be honest. But the internal pattern is still a reasonable 3-wave pattern. So it does look like we need at least a corrective move higher. But I'm kind of still erring on the side of a 5th wave up in wave C. But this could also be a 5th wave up in wave 3. So there's latitude there also. But I will suffice to say that we have completed and exceeded the rally potential that I was looking for in this C wave way back at the beginning of 2021. If you go back to the videos in the beginning of 2021, I was looking for a long-term rally in wave C. We've done it. I mean, we've filled the channel. Is it a long-term reversal now? I don't know, but something tells me we still have another leg up within this pattern. Here's the 4-hour count. We've gone from weekly down to 4-hour count here, but suffice to say that the reversal or the rally that we've seen in the last week or so is more impulsive than what we've seen over the preceding rallies. So it's a bigger magnitude. It's got a nicer internal pattern, let's say, than the previous, the rally that happened off, let's say, the December lows, or the rally that happened off the early December lows. So internally here, the previous, let's say, 3 rallies were more corrective than impulsive. So right now, I think we have a fitting, let's say, possibility for a reversal pattern here. So let's get into the hourly count. We've got there's my 5-wave pattern higher in wave 1. We hit and exceeded the target that I was looking at for previous 4th wave high, 134, and then we reversed pretty heavily off that. So I don't think this wave 2 low is in just yet. It looks like we're probably going to test the lows again. Maybe we push higher today, complete 3 waves up in wave B, somewhere above 132.60. Let's say 132.70 or 132.80. Complete wave B, and then we move lower again in wave C. So it's 3 waves down in wave 2. I want a higher low later on this week, above 129.50. And if we get that, that's 3 waves down, and then next week we'd look for a rally again. Okay, so we're done in the dollar crosses. Let's go for the hit it out of the park here. It's actually running quicker than I thought. We had a possible wave 1 down wedge off the 2021 high, or sorry, 2022 high. What was it? January 2022. 5 waves down, leading diagonal, wave 1. Since then, it's been an expanded flat correction. We reached a new low in wave B, and we reached an interim high, or let's say a higher low, higher lower high. Is that possible? Let's say a final lower high, hopefully, in wave C of 2. So ABC, expanded flat correction, wave 2. The action of that correction, that high, which came in mid-December, has been impulsive to the downside. And the action of the recent low has been corrective to the upside. So it's all facing the right way. It's all building in the right way. Okay, so if this is anything to go by, maybe now we're looking at the beginning of a very large third wave down. Internal pattern, you can see the possible alternate there. That's the daily count. It's still valid, whatever way you want to look at it. It's a valid pattern in the red boxes there, and I've just shown you that pattern on the daily count. 4-hour count, we're running with a slightly different internal pattern here. It's still pointing to a wave 2 high at one lower degree though. So there's no real major difference here apart from the degree of the count. So we've got 5 waves down and 3 waves up. That's the scenario I'm working with. And you can see the impulsive nature of the decline versus the corrective, long drawn out kind of reach to nowhere that has happened over the last few weeks. Let's get into the hourly count here. You can still see on the 4-hour count we've got a diverging momentum off that rally. We've reached a peak, a second peak, let's say, at a lower high. So are we in a momentum reversal, long-term momentum reversal? That's what I'm going with. You can see the hourly count, 5 waves down in wave 1. Let's say the fly in the ointment here is it's a fly in the ointment on the derivative chart. It's not on the cash chart. So it's a clean 5 waves down on the cash chart. It's a fail fifth on my derivative chart. Suffice to say, it's a solid count. The action over let's say the Christmas New Year's period, generally sideways. We rallied last week to complete, I think, a second wave. Internal pattern here, it looks like 3 waves up in wave A, triangle B wave, or sorry, A wave down, triangle B wave, C wave down to complete wave B. So very complex B wave, but 3 waves nonetheless. The internal triangle here was the real head scratcher. But I think we filled the channel pretty well. The overall pattern is pretty solid, and we had 5 waves up to complete a C wave. So it's overall 3 waves, second wave complete, failed below the 62% retracement, and impulsive move lower yesterday. Right now, if we're on the verge of a third wave down of wave 1 of 3, this should be a substantial decline coming our way in this third wave. I would suggest, this is wave 1. So this would be wave 1 of wave 3. So, and what's lining up in front of us is wave 3 of 1 of 3. It's not the overall end of the world decline, but it should probably bring us down probably towards 30,000 again. So it's going to be a substantial decline in the 10% area. Overall 10% market decline. I think over the next month or so, probably by mid to late February, we should break to a new low in wave 1. So let's go back to the hourly count here. You can see we've got wave 1 and 2 pretty much in place. What we're looking for is a signal to suggest that wave 3 of 1 is underway. So that's where I am right now in the beginning of the new year. It's the 10th day of January, so I think this long-term outlook probably fits at this point. So hope you're enjoying it. Let's get out. Excuse me. Let's get into gold. The daily count here. The rally is underway in wave 5, I think. Now, I've been calling a top to this rally over the last couple of weeks, but it's been as confounding as you could probably, wish for. It hasn't happened just yet, but I know we're darn close to it. This correction in wave 4, I was looking for a new low in wave 4, but it never transpired. This correction in wave 4, it hit all the targets along the way. We were looking for a decline back into wave C last year. It happened. The rally that we were looking for to begin wave 5, it came. So now what we need is a substantial higher low, or not a substantial decline to create a convincing higher low. We haven't had a convincing higher low yet. So we need a corrective decline, kind of blow off the steam out of the rally that's happened. So I'm looking for that corrective decline to come our way pretty soon. Here's the 4-hour count. It's probably at the wrong degree now. We should probably up the degree of this count at least by 1 degree. So let's do that right now. And I'll update the actual count doesn't change. It's just the degree of the labeling. Okay. So wave 1 up pretty much, we've pretty much come to the end of this rally. The steam is running out. There has been nothing but overlap after overlap after overlap. We have had, in total, initial decline in mid-November. Okay. The decline came in, it bottomed, we overlapped to a new high. Then we declined back below the previous high. So that's an initial overlap. Then we had a rally to a new high, a further overlap. So that's 2 overlaps. Rally to a I don't think we actually made a new high, but close to a new high. 3rd overlap. Rally to a new high, 4th overlap. Rally to a new high, 5th overlap of the previous high. Now we've got the 6th rally to a new high. I bet we'll get this. This should be close. Maybe there's another. Maybe there's steam in it for another new high, but I don't know. The next serious decline will be the one to take us down in wave 2. I think the nature of the internal pattern here is just so that it points to an exhausted rally. You can see on the 4-hour count, we haven't managed to kind of, let's say, compete with the initial blast higher in momentum that happened off the, let's say, extreme low. All that we've done is wane into these new highs, and I think we need a corrective. Hence the reason why I'm looking for that corrective decline, and it should be a substantial corrective decline, and it should take us back, towards 1700, I'd say again, in 3 waves. That'll be the kind of decline I'm looking for, and that'll be the kind of low that you'd be looking to buy into. Here is the ending diagonal pattern I'm looking at in wave 5 of 1. Now I'm going to move this higher by 1 degree tonight, but it doesn't change the internal pattern. So we had a possible triangle 4th wave, 3 up in wave 1, 3 down in wave 2, 3 up in wave 3, 3 down in wave 4. Maybe we get 3 up in wave 5. We'll see how that goes. Action this week so far looks pretty corrective to the downside. So, maybe we close out that this wedge pretty soon in wave 5 of 1. We'll see how it goes. Okay, crude oil. Here's a daily count for crude oil. You can see that I'm not particularly bullish. Now, there are a few ways to view this action. You can see that we we've closed on off the, let's say, the extreme high back in early 2020. You can see that we've closed out a trend channel once, twice, coming up to 3 times now. So is there the potential for, let's say, an alternate count that will bring us a substantial rally, possible back towards 92, 95, maybe 90, maybe even $100 again? There is the potential for a kind of a clearing rally back towards one of these previous highs here. I'm going to zoom this in a bit. Oh, can I? Hold on a second. Scale fix. Okay. Now, I'm still looking at this as a B wave high at that 127 high previously. So let's get close enough. 128, whatever it was at the final high. This should be a C wave decline. It remains to be seen how this pattern, let's say, develops over the next few months. But I'm looking here at the kind of the closeout of this trend channel, and it seems to provide some sort of support to the internal action. So I am not ruling out at least a reasonable rally. It could be a second wave towards $95, or we could get a lower degree second wave. Let's get a lower degree second wave back towards maybe $85, and that would complete kind of a small 3-wave correction off this lower trend channel tag that happened back in late December. So we could be working out a lower degree correction here higher. I should go to the 4-hour count to show you that. Here's that alternate count for wave 2, and that's what I've been talking about recently with the subscribers. So if you're not a subscriber, you don't get this. So anyway, you can see that's the possible wave 2 in blue. The alternate count for wave 2 in blue would be that that rally back above $95 again. So that's one alternate count. The alternate for wave 2 in green is a rally back above 85. Let's say towards $85 again. That would give us a 62% retracement, I think, of the recent decline. Yeah, that gives us 84.40. Call it $85. We do have a solid 5-wave decline, and that is the most kind of let's say it's the canary in the coal mine here for this most bearish count. This is signaling that we are possibly beginning a new, let's say, acceleration lower, and if that's the case, well, it does line up with all the economic indicators that are coming in, like these very kind of lagging economic indicators, which are showing us a frightening slowdown in the economy, worldwide economy. We're getting that slowdown here anecdotally, locally in Ireland. I can go into a trade shop or a builders providers or something like that, and there's nobody there. So investment, let's say at that kind of ground level, is not happening. There's definite slowdown in the housing market, let's say at the purchasing level. So the mortgage origination level is probably going to be the next shoe to drop. And that brings the credit levels lower. That brings M2 lower. At this point, I think Ireland is not a leading indicator in this worldwide recession. It's probably a lagging one. For some reason, we were a leading one the previous time. The US is definitely leading the charge in this, burgeoning depression. So, if we do confirm, let's say, an acceleration lower in the market, in the stock market, an acceleration lower in economic indicators again, bankruptcies, live registers and employment or unemployment lines start to growing again, then you're talking about confirming the next recession crude oil is not going to stand up against that. I don't care what anyone says. So we could rule out this larger alternate account completely. This lower degree alternate account in wave 2 for a rally back above $85 again, that's still a reasonable possibility. So, but I am watching the decline that happened late last week and yesterday is pointing towards the more bearish outlook. So, make of that what you will. There again shows that alternate count. But we do have 5 waves down and 3 waves up in wave 2. The rally yesterday failed below the 50% retracement and spiked lower. So are we beginning wave 1 of 3 of 3? That's the question that I'm posing today, last night, today, tomorrow. And if that high at 76.86 holds and we start turning over to the downside again, then I think we're into wave 3 of 3. And that could be catastrophic. So watch out for that. Casually, I'll just say watch out for catastrophe there. Okay, let's move on. This is the S&P. I think we can probably rule out that alternate count for the S&P there. That's the daily chart. You can see the volume off the extreme highs. Volume has collapsed majorly. So in general, I think volume will probably decline back towards, unless we, if we get further decline, we'll get downside volume, obviously. But the participation within this market again is shouting. Widespread participation is evaporating. So let's say the crowd, the crowd participation that led to this, screaming rally into wave 5 of 3 will not exist anymore. So, it's kind of like a case of we've been fooled once, we're not going to be fooled again. People are going to be concentrating on their wallets anymore, and that will be, in terms of a burgeoning recession depression. So I think we've begun this next leg down into wave 3. The alternate count is always there, but I think it's leaning heavily towards the idea that we're heading into wave 3 of 3 now. Okay, so here's 4-hour count. You can see the alternate count here. I could step this up, no problem. I mean, it doesn't really change anything, just like in the Dow. We could even move this wave 2 over here. It just changes the internal degree of the next decline. So it doesn't, let's say, the wave count itself doesn't change. So we've got a clear 5 waves down in the S&P and a clear correction to the upside. Correction went on for longer than I expected to, but it still is nonetheless a 3-wave pattern up. I think we are getting that signal now that wave 3 down is coming our way. And if we break to, let's say, a new low below, let's say 37.60, again, I think that will be a solid indicator that wave 3, a large degree wave 3 is underway. So here's the hourly count. 5 waves down in wave 1. 3 waves up in wave A, an A, B, C, D, E, triangle, wave B, contracting triangle, completed wave B. If I take away the channel here, you'll see that contracting triangle pretty clearly. So the wave B low comes in at 37.97, call it 3800. And we impulsively rallied last week out of that. So that impulsive rally yesterday, it completed on the nose, more or less, of within a few pips of the 50% retracement level. And then it was almost robotic, as I wrote last night. It was a robotic top. It was a pre-programmed top, I think, which is it's the most frustrating and annoying thing about program trading is these fib levels are almost baked in the cake to some extent. So we rallied, we hit the 50% retracement level, and we impulsively moved lower. Now, there's no confirmation that this is wave 1 of 3 yet. If we break the wave B low, 37.97, call it 3800 again, and we have a further corrective lower high, then I think we can look towards a third decline coming our way later on this week. What was I giving for targets last night? This wave 2 in blue if we take the decline in wave 1 in blue and we project it off wave 2 high, that gives us a target for wave 3 in blue. So this is wave 3 of 3, down around 2,800 again. So we're talking about a 1,000-point decline in a third of a third wave down. So 1,000 points, that's about another 20% decline, 23, 24% decline in the S&P coming our way over the next few months. So it's nothing to be snuffed at or sneezed at. Take it seriously. If there's some protection that if you need to protect yourself, if you need to kind of, let's say, if you're not going to divest completely, which is, it's perfectly and completely understandable. Maybe, there's some sort of hedging that you can use. Maybe there is some sort of, rebalancing that you could take. Maybe you could take some, put something into cash. Because if this decline does materialize, then, it's going to be quite a whack to your wallet. Okay, I'm going to move on. Let's get on. Silver. Silver has been the confounding market, let's say, to me, over the last while. I was expecting, this market to make a new low. It has confounded me to the upside. I do, just like gold, I think we do need a substantial correction here. Probably back towards 1850 or something like that again, to correct the rally that's happened over the last while. I've yet to figure this one out, to be honest. You could still call this a fourth wave high and wave 5 coming our way, but maybe I'm holding on too tightly to that scenario. But nonetheless, I do think a very substantial and serious hit is coming in silver, and it may just have started. Whether it's a fifth wave down or it's an internal correction, wave 2, maybe this is wave 1 up to begin wave 3, and maybe wave 2 is coming our way. But if that's the case, then I think we correct down below $20 at least, maybe down towards 1850 or so. Let's see how that goes. I'm not going to get into the short-term chart there. Let's move on to Bitcoin. Here's a daily count of Bitcoin. When I was looking at that wave B high, that new high in November 2021, and the whole world was screaming Bitcoin, and I was shouting, "It's the end! Get away from Bitcoin!" And boy, oh boy, did it not disappoint to the downside. Now, we're not there yet by any stretch of the imagination. I still think we're in a series of 1-2 waves to the downside, and I think a new substantial low is coming in Bitcoin. This will probably come along with revelations in the catastrophe that is these trading platforms. There's going to be a few more of them that are going to collapse and take people's money with them. It's a shame. So this could be wave 1 and 2 to start wave 5, and this could be wave 1 and 2 to start wave 3 of 5. So that's what I'm looking at the short-term level. So we've got 3 waves up. It's actually mirroring the S&P here. 5 waves down, 3 waves up, 50% retracement. At least yesterday, a spike lower. No confirmation yet that this is wave 1 of 3. But if we do break, 16,000 again, then we're going all the way down in a third of a third of a third of a fifth wave. Okay, so let's move on. The NASDAQ, we had a pretty clear 3-wave correction higher, and you can remember only a few weeks ago, back in the middle of December, I was calling this a second wave high, and I was looking for a nice impulsive move lower out of that 3-wave correction to a new high, a lower high. So we have 5 waves down in wave 1, we have 3 waves up in wave 2. Now we have 5 waves down at 1 lower degree and 3 waves up at 1 lower degree. Here is the short-term chart. 3 waves up, almost expanded flat, pretty much call it an expanded flat correction. In wave 2, we tagged 38% retracement, and we have spiked lower yesterday. Not sure. Again, I'm not sure if this is the reversal into wave 3 of 3 of 3, but It's beginning to look that way. So just don't rule it out. The whole world and its mother seems to be ruling out. I say that everybody is bearish, but fund flows don't show that. People are still piling in. Whether this is just a mirage or something, I don't know. But nobody's actually. There hasn't been a serious amount of selling just yet. There's been a whole lot of, of puts bought, but nobody's actually. It doesn't seem like anyone's actually sold their stocks yet. So maybe that's the next wave down. Maybe people will actually start selling their stocks. If you can find a buyer for them, good luck to you. Okay, do we have a three-wave correction to a lower high? Well, that's on the cards. It's certainly been borne by the action so far. So I think that gives us the long-term view, short-term outlook, all the way to the end of this market. So there's always the possibility that I'm wrong by the markets, but I'm not wrong about the message of salvation. And that's what I always end these videos with. This is where most people turn off, but if you're not going to turn off, that's cool. I'm talking to you. Someone did come. God did create let's say, a solution to the pain and the suffering that happens in this world. This world at the moment belongs to the dragon. But Jesus bought it back with his blood, and he's going to come back to claim his inheritance. And you may think I'm a complete idiot. That's fine. But the stone that was cut out of the mountain, the stone that was rejected, will become the cornerstone again. And that stone is Yeshua. The stone that hits the kingdoms of the world, and that's coming, will destroy all kingdoms of the world and will create a new kingdom to last forever. And that's the kingdom I want to be part of. I don't want riches in this world. Yeah, I've got enough. But if you want to join my website, that's fine. But kingdoms of this world will become the kingdoms of the Messiah. That's prophesied. That will happen. It's up to you which side you want to be on. You want to be on the side of the dragon and go into eternal damnation. That's fine. That's a decision up to you. But you have to choose to be part of the kingdom, and that is giving your allegiance to the Messiah who paid for your sins. And if you accept your salvation, if you accept your Yeshua, his name actually means salvation. If you accept him as your king, as your Lord, your Savior, he will gladly pay for your sin and vouch for you before the Creator God. And that's how you enter the kingdom. So if you want to contest me about that, if you want to, chew my head off, you have my email. It's down there below this video. Apart from that, I bid you adieu. Hopefully, I'll see you on Friday. Maybe I won't if I'm still around. There's always that possibility. We don't know if we're going to be granted tomorrow or not. So, until Friday or Saturday this week, I'll see you with a weekend video. God's blessings to you all. Hope you have a enjoyable and fruitful week. Bye-bye.